Greetings, Ted Hicks, founder, CEO, and Chief Investment Officer for Hicks Associates Wealth Management. Today is Wednesday, December 1st, 2021. This is our monthly market monologue where we're going to recap the month of November and talk a little bit about some of the things that we see that might warrant a little bit more attention or concern. Before we begin, we have to remind everybody that this is for informational purposes only. If you have any specific questions, please feel free to reach out to me or my team. We'd be happy to assist you in any way that we can. That said, we want to start off by looking at what we call the seasonality chart. Seasonality chart just shows us how does the S&P 500, which is how we're measuring the broad market in the United States, how does the S&P 500 perform on an average basis? And again, this is since 1950. Now, on average, the month of November tends to be pretty good. Not true this calendar year. So let's look at it. So this is the monthly chart for the S&P 500, and you can see that top to bottom I'm measuring, this is not exact, but top to bottom the market overall was down about 4%. You'll see in a second that the S&P 500 ended the month down only 1%, but when we count from the high, which unfortunately is how some clients will look at it, we're down about 4%. Now, what we'll see is that this volatility really showed up only in the last 2 weeks. And reality is it's really only 2 days. I'll show you that in a second. So one of the things I want to point out before we move on, this is the weekly chart. And on this weekly chart, you kind of see a little bit of a resistance level that has formed. So this is important when the market recovers. When we get to that same level where you see that red line, will that act as a resistance level for the market to struggle to break through? We will see when we get there. Now, the daily chart, I'm trying to get into the Christmas spirit and have changed the calendar, the charts to red and green. Red is bad, green is good. And so here you easily see that the S&P 500 really just had 2 bad days in the month of November. Now, when we have days like that, we want to look at volume. Volume tends to be a confirming indicator. And what we see is that this candle right here is the Black Friday, so the day after Thanksgiving. And we see that that day was bad, but it was on average volume. That's kind of good news. Bad news is that yesterday's activity was on above average volume, so that is not necessarily good news. Now, when we look at the Russell 2000, Russell 2000 is the small company index, and you can see here on the right, I've noted when the month began. The Russell 2000 has struggled to break out of this channel all year long. And the month started on a pretty good day for the small company index. And matter of fact, 2 days later, it finally broke out of that channel. That's the good news. Bad news is it couldn't stay above that channel. So for the entire month, the Russell 2000 was down approximately 4.5%. Again, these measurements are not exact. But again, from the top of that index or top of the month to the bottom of the month, it was down about 10%, which many would consider to be a correction. Corrections are down generally about 10%, and bear markets are down about 20%. Those are somewhat lazy definitions, but that's what the majority of us would consider. So overall, this is how the major indices did for the month of November. The red line is a NASDAQ composite. You've got the S&P 500 again coming in down about 1%. The Dow Jones Industrial Average down about 2%. The Wilshire 5000 is down about 2.3%. And the small cap index down about 6.7. As I indicated, that last measurement was not exact. So one of the things that a lot of people keep asking us about is about Bitcoin. So how did Bitcoin compare to the other indices? You can see it started off the month pretty good, but actually by the end of the month, it was down about 7%. So there's your answer on Bitcoin. A couple other slides on breadth. Breadth is just an indication of how strong the overall market is. Sometimes we define this as how many soldiers are following the generals. If the generals, meaning the indexes, if the generals are advancing, but the soldiers, meaning the individual stocks in that index, are not also advancing, that's a bad sign. So in this case, you can see the overall, the advanced decline line at the top. The line is clearly going down. That's just telling us that there are more stocks that are going down than are going up. And again, on the S&P 500, this is what percentage of the S&P 500 is above the 200-day moving average. Again, that 200-day moving average is generally considered the demarc line for whether a stock is in an uptrend or a downtrend. At the beginning of the month, the S&P 500 had about 70% of that index above the 200-day moving average. That has come down, and now we're down at about 55%. That's an indication that the stock market overall has definitely weakened. Quick look at the relative rotation graph. This is basically just to help us look at momentum and which sectors within the S&P 500 seem to have the most momentum. And XLE is energy, and XLY is the consumer discretionary index. So those two sectors seem to be the ones that have the most momentum, although everything did get hit these last couple of days of the year. A couple other slides. This is what we call the vertical speed indicator. I use the acronym VSI. When you're looking at the stock market, there's no single indicator that is going to tell you definitively what's going to happen. And so the VSI is a component or a roll-up, if you will, of 14 different indicators that I combine to use as the weight of the evidence approach. And right now, the VSI has flipped down to about 50%. So half of my signals are on a buy signal and half of them on a sell signal. And in particular, what I'm trying to show on the red circle is the fact that at the end of October, we had moved up to 100%. So all of my signals were back on a buy signal, and then we have flipped all the way back down to a 50% because of where the month ended. Again, this is not necessarily an indicator of what's going to happen. It is just an indication of elevated risk. And here's another one of the ways that we will look at elevated risk. This is the VIX. It is frequently referred to as the fear index. And you can see the fear index has definitely spiked. And there's some argument that I've seen from some other technicians that once we rise above 25 on the VIX, that we could be entering, could being the key word, we could be entering what we refer to as a tail area, right? And so what do I mean by that? So if you know your math, you're familiar with the bell curve. And what the bell curve is trying to show us is for normally distributed data, where does the data typically fall? This weird symbol is the standard deviation. And what this is effectively saying is within the average, this line right here would be the average return. Within one standard deviation plus and minus, you're going to get about 68% of the data. Well, then you have two standard deviations, and I think that works out to be about 95% of the data, something like that. And then you have the tails on the far right and the far left. And that's what I mean when I'm saying that when the VIX jumps like that, we could be entering one of these tail environments. Specifically, we're obviously concerned about the negative side of that tail. And by the way, the stock market is not normally distributed. So when you look at the stock market and you draft a bell curve, it's not going to look like this. So I can elaborate on that if you have any questions, but I don't want to bore everybody in this particular video to explain that. So finally, we'll wrap up with a couple extra slides to remind everybody that we typically get what we call a Santa Claus rally in the month of December. Again, November is historically pretty good. December is also pretty good. That doesn't always happen. 2018 in particular was a very tough December. So who knows what's going to happen this particular year. That said, it is December. So we like to remember the reason for the season, so to speak, and wish everybody a Merry Christmas. If you have any particular questions, by all means, feel free to reach out to me and my team. We hope you find this helpful. And again, from all of us, we wish you a Merry Christmas, and we'll see you again next month.